Hey there folks, this is Diksha Jiniani representing Team Trendline, and in this week's video we will discuss a sector that is back on the analyst radar, non-banking financial companies or NBFCs. NBFCs have gained a lot of attention ever since the retail sales data for the auto sector got released for the month of September 2022. So firstly, we will analyze the past performance of top NBFCs. We will then take a look at the current emerging trends within the housing and auto space. Finally, we shall discuss the near-term outlook for the companies in question. So let's get into it. Business sentiment in India revived strongly post March 2022. Retail sales were growing in double digits. Credit card spends were consistently above the 1 lakh crore mark. Passenger vehicles had surpassed the pre-pandemic levels, and housing sales were resilient despite being off the peak. These trends caused the AUM of top NBFCs like Bajaj Finance, HDFC, Cholamandalam Finance, Shriram Transport Finance, and SBI Cards to grow in double digits on a year-on-year basis in Q1 FY23. So the rise in AUM also trickled down to the net interest income of these players. So majority of the NBFCs saw their net interest income grow over 15% year-on-year in Q1 FY23. Bajaj Finance led the pack in terms of both NII and operating profit growth in the previous quarter. HDFC, meanwhile, lagged the other players in terms of both year-on-year and sequential growth, owing to the delay in transmission of interest rate hikes to the borrowers. The asset quality also considerably improved across the NBFCs. However, if you see, vehicle financiers suffer from higher gross NPAs as compared to consumer finance, housing finance, and other diversified players. This is owing to the weak economic sentiment and rise in fuel prices post the pandemic. Now, what is the source of the growth in AUM and NII of these companies? So Bajaj Finance saw an all-round growth of over 28% in its AUM, and it was across the segments in the previous quarter. Its consumer finance business, which is the B2C business, and its sales finance business grew faster than the other segments. Sales finance basically consists of the bill or invoice discounting facilities. Now, this segment particularly gained a 1% share in its portfolio, in its AUM, while the auto finance business lost share in its AUM. Now, if you look at the AUM mix, it's very well diversified across businesses, which protects Bajaj Finance from the cyclicality of the auto sector and any possible downturns in the real estate sector as well. Now, moving on to another major NBFC, which is also a leader in the housing finance market, we are talking about HDFC here. Nearly 80% of its AUM consists of individual home loans, while the rest of the portion consists of business loans. Now, there has not been much change in its AUM in the past 1 year. However, the value of loans that it approved across income segments has altered substantially. Now, the higher income groups within these loans approved have risen to 50% in Q1 FY23 from 42% in Q1 FY22, while the share of middle and lower income groups have fallen. Now, the higher income individuals are the ones who earn more than 18 lakh per annum, according to the company. HDFC is clearly focusing on premium and luxury housing sector, as these are less sensitive to any form of any rise in real estate prices as well as interest rate hikes. Now, moving on to Shriram Transport Finance, the company is a pure play vehicle financing player. If we see, medium and light commercial vehicle grew the fastest at 20% year on year in Q1 FY23. Eventually, it gained 3% share within Shriram's AUM, while heavy commercial vehicle lost share on a year-on-year basis. According to the management, there was a delay in recovery of demand for heavy commercial vehicle due to over 30% rise in the cost of ownership in a matter of just 2 years. Pre-2020, an average commercial vehicle used to cost around 34 to 35 lakhs on road, which has now risen to roughly 45 lakh owing to higher steel prices. Now, moving to the asset mix of Cholamandalam Finance, the company has over 65% exposure to the vehicle financing division. However, the share of vehicle finance, especially commercial vehicles, fell by 2% on a year-on-year basis in Q1 FY23. The company is actually focusing on scaling up its new business segments, which are consumer and small enterprise loans, small business personal loans, and MSME loans. The share of these new businesses rose to 4% in Cholamandalam's AUM, and the plan is to take the share to 10% over the medium term. Also, the home loans and loan against property segment of the company also grew faster than the flagship segment, which is the vehicle financing division. Now, the management of Cholamandalam Finance was a little cautious on the outlook of the vehicle financing division back in July. This is owing to the fact that Q2 is a seasonally weak quarter for the company, and the monsoons were uneven in India, and there was a considerable rise in cost of ownership for the end consumer. Also, a point to note here is that Cholamandalam Finance primarily focuses on the rural and the semi-urban regions of India. However, moving to September 2022, Arul Selvan, who is the president and CFO at Cholamandalam Finance, was much more positive on the outlook for the auto financing division. This is because the company was seeing very good traction in the light commercial vehicle space and used heavy commercial vehicles. In fact, Arul Selvan also believed that we might be in the early stages of a possible upcycle in the CV space. And when you look at the retail sales numbers for passenger vehicles and commercial vehicles in Q2 FY23, we can clearly see the point in Arul Selvan's positive stance. Now, while the commercial vehicles retail sales grew over 20% year on year in Q2 FY23, they also crossed the pre-pandemic levels by a margin of 6%. Now, the CV sales in first half of FY23 also managed to cross H1 FY22, particularly owing to the strong traction in second quarter. The sales in September 2022 were very encouraging and were driven by the sales by higher growth in the heavy commercial vehicle space. Now, the heavy commercial space saw their sales finally pick up owing to higher demand coming in from the infrastructure space. Even light commercial vehicles saw their sales grow in double digits owing to good demand coming in from the e-commerce space. Now, the October sales trends are also likely to be very strong owing to the ongoing festive season. Now, these trends bode very well for vehicle financiers like Shriram Transport and Cholamandalam Finance. Now, Shriram Transport will, gain much more because of its higher exposure to the heavy commercial vehicle space here. Now, even Bajaj Finance will see a meaningful recovery in its auto finance AUM in Q2 FY23. Now, moving on to the housing sales numbers compiled by ANAROCK for Q3 of 2022. Now, the housing sales across top 7 cities of India did recover sequentially in Q3 after having fallen 15% in the previous quarter. Though they are nowhere near the peak of Q1 2022, they are still 40% higher on a year-on-year basis. Now, see, there has been some impact on the housing demand owing to the rise in interest rates. The home loan rates have risen by over 2 percentage points in previous 6 months to reach a range of 8 to 9% currently. However, ICICI Securities sees the impact to be on the lower end because, see, most of the companies haven't passed the full interest rate hikes to the end borrowers. And HDFC agreed to this in the earnings call of Q1 FY23. They said, so they basically follow a interest rate reset cycle of 3 months. So any hike in interest rates not immediately passed on to the borrowers. Now, see, Bajaj Finance and HDFC will see a considerable traction in their home loan AUM in Q2 FY23. However, there are concerns regarding additional rate hikes that we may see in the future. According to analysts, interest rates may rise by another 50 basis points in the next 6 months, especially since US Federal Reserve continues to hike interest rates on its end. Now, this factor coupled with the rise in real estate prices may have a bearing on the credit demand. Now, see, notably in Q2 FY23, the real estate prices rose by between 5 to 12% year on year for major centers like Hyderabad, Bangalore, and Delhi NCR. Keki Mistry, who is the CEO at HDFC, however, has a positive view on this end. He says that more number of people are now able to afford a residential property than they were in 2016, owing to continuous rise in pay scales. Now, it will be interesting to see if real estate demand and the subsequent growth in housing finance company holds up in the upcoming quarters. See, the consumption trends in India were also very strong in previous quarter. So the retail sales, according to the survey of Retailers Association of India, retail sales grew over 20% in September 2022 as compared to September 2019. In fact, retail sales have grown in double digits ever since March 2022. The traction and travel and tourism sector was also very strong, and across summer of 2022, July and August, in fact, the festive season will give it give it a greater boost to this service sector. Now these trends, these trends in retail spending and travel sector will definitely bode well for a credit card player like SBI Cards, and even Bajaj Finance for that matter, because see, Bajaj Finance has roughly 28% exposure to consumer, which is the B2C segment, and this segment will continue to clock robust growth in Q2 FY23 as well. Folks, now that we have understood the overarching trends for real estate space, for auto space, and the consumption segment, let us take a look at the growth forecasts for the key top NBFCs in question. So see, Bajaj Finance has already released its business update for Q2 of FY23. The company has seen its AUM grow over 30% year on year and 7% sequentially. This was ahead of the estimates of Prabhudas Lilladher. In fact, consensus estimates of analysts see its revenues growing 6% sequentially to reach nearly 7,000 crores, led by an all-round growth. Now, HDFC is also likely to see a very strong growth in both its revenues and net profit. And in fact, analysts see its AUM rising to 7 lakh crore in Q2 FY23, driven by its individual home loans. Now, let's analyze the FY23 revenue and net profit estimates of Trendline's forecaster. Now, see, most of the companies will clock over 14% revenue growth in FY23. However, you have Bajaj Finance and SBI Cards leading the pack. See, Bajaj Finance had already given a growth guidance of 25 to 27% for its AUM back in Q1 FY23. So analysts see its revenues growing in a similar range. Now, SBI Cards will also see over 25% growth in its revenues because because of the rise in e-commerce sales in this festive season. So the company is also working on ramping up its card issuances and reducing the attrition of credit card holders. In fact, it managed to gain share in value of credit card spends month on month in August of 2022. So both these companies will also see good net profit growth in FY23. However, Bajaj Finance is particularly pricey here, and it trades at a current PE valuation of 52 times. So this was my time, folks. Thank you so very much and have a great day.